Hey, this is Warren Redlick about to take on Chicken Genius Singapore. Used to be a big fan. He has lost his way. He's all of a sudden become, I don't want to say Tesla Q, but he's Tesla Q. Are you ready? Let's go.
I like Tesla as a company. I am a fan. The Model 3 Performance is the best car I ever owned, period. But Tesla is the stock. Now? You must be kidding me. I'm presenting to you facts. I know there will be reaction videos made. Toxic fanboys coming after me.
Hey, I'm a toxic femboy. I'm so excited. He said there were going to be reaction videos coming. Here you go. And apparently I'm a toxic femboy. I thought I was an incel, but okay, I'm a toxic femboy. We're going to go through bit by bit of Chicken Genius's analysis, and I'm going to show you the flaws in his analysis.
I don't depend on YouTube. I have a great life outside of YouTube.
Apparently, he likes jumping off boats with lots of other guys. Where are the women in this picture? Sorry.
I bought it way back here, and I sold some at 1,002. This was before the split. I bought back too early and started to hedge here. I missed out the spike. I also missed the downside. I started to short the stock at this resistance level by selling stock, converting my hedge to a short.
As you might imagine, this is not the strategy I prefer in investing in general. What you see here is Chicken Genius was a long-term investor. He bought the stock early. He held it for a long time. He sold it at what actually was a peak. This is lucky. The idea that you're going to sell at a peak, you don't know where the peak is. It so happens that this time he did sell at the peak. When he was talking earlier here about selling at this point, he did catch a peak. You don't know where the peak is. He got lucky, right? On that particular trade, he got lucky. But you don't know that it's not going to go up more. And if you're waiting for a particular level, it might dip before you get to that level. So playing short-term games, playing these timing games and trying to catch peaks and catch dips, you just saw that he missed some peaks and he missed some dips. I can't predict where the peaks are and where the dips are. He can't predict where the peaks are and where the dips are going to be. No one can. Markets are unpredictable. That's life. Long-term, you can make a general sense of, hey, this is a company that's growing fast and has the ability to continue growing and has the market to continue growing into. And these are the things that most of his video, he gets away from that. And when he does talk about it, he gets it wrong. But you can just see here, he's playing all these games, synthetic shorts, puts, calls. You either buy the stock and hold it, or you buy a different stock, or you, as you'll see later, you hold cash. Any choice you make has consequences. And the idea that there's some magic solution is not true. And you just saw it here. He's playing timing games, and it works sometimes, and it doesn't work other times. What does work as a long-term investor is buying and holding a stock that you believe in with good reason, where you've gone deep, you've done your due diligence, and you understand that this is a stock that's going to succeed. This is a company that's going to succeed. Tesla is a company that's going to succeed. It's transparent. It's obvious. He acknowledges that it's the best cars. If they make the best cars, they're going to sell more cars than other people. But let's keep going.
And recently closed out for a nice profit.
See, there's that point. He's looking at short-term profits. He's valuing what he has in terms of the cash on hand. And you can look at cash as your focus. I think it's the wrong focus. If you're looking at short-term, how much did I make on this trade, instead of thinking, where am I long-term in my investment strategy?
Looking back, my consistent track record of being too early is goddamn annoying. But the profit is a profit. Guess that's all that matters.
Did you catch that? First of all, he acknowledges his own timing has not been perfect. He's made mistakes. It's not really mistakes. You can't time markets. You can think you can time markets. You can think you have the answers. The reality is short-term is impossible to predict. It just is what it is. And then he says, profit is all that matters. But I would say differently, because profit is when you sell. And if you're buying and selling in the short term, you're booking profits. Now, I have never made a profit on Tesla stock because I have never sold it. I am way up in terms of the value of my Tesla stock today versus what it was when I bought it. My average cost basis is probably somewhere around $40 a share or $30 a share or something like that. I don't even know what it is. But I'm looking at 2025, 2030. I don't anticipate selling any. I may have to sell some stock in the near future. That's a long conversation. My hope is I have to sell. This is like IRA rules, minimum distributions, whatever. I may have to sell and then hopefully buy back as much as I can in non-IRA accounts after. But generally speaking, I don't expect to sell the bulk of my Tesla stock until maybe 2030. So short-term profits are irrelevant. The question is, what am I going to hold in 2030? Not what do I have today, not what's my cash pile today. You're booking profits, you're missing out on long-term gains because you can buy and sell, but you get the peaks and dips wrong in this buying and selling game and you miss the increase. A really good example of this is imagine you're waiting for the stock to dip to 200 and it falls to 240. And then the stock goes to 5,000 and you didn't buy at 240 because you were waiting for 200. And then the stock goes to, let's say the stock goes to 1,000. You miss out on a 4x gain because you were hoping for a 5x gain. What did you really gain? What would you really have gained? What if it dipped to 201 and you didn't buy? So I just don't play the dip game. I don't play the peak game. I just buy it when I have free cash available and I hold it until I need to sell, until I'm forced to sell. That's my basic strategy.
Let me ask you this serious question. This is one of the worst economic conditions ever. Do you really expect the first thing people will buy the car? It's not just a car, a premium car.
Okay, so this is a critical mistake that Chicken Genius is making, and it's really a short-term mistake, right? Because does he think the recession is going to last forever? Does he think he knows the timing of the recession? Does he know how consumers are going to behave? Now, I think he's wrong about something here. I think people need to buy a car sometimes. So on the one hand, yes, people will buy cars in a recession if they need a car. Will car buying slow down? It clearly does. But one company outperformed in the last, we had a crisis, a societal crisis, a global crisis over the last few years. One company grew in the middle of that crisis. One car company grew. It was Tesla. All the other companies were shrinking. Tesla grew fast in the middle of a crisis. So in the middle of an economic crisis, which company do you expect to outperform? The best companies outperform in a crisis. What stock do you want to hold in a crisis? You want to hold stock in the companies that outperform. Tesla is the stock that is clearly outperforming. Let me just show you this. This is Michael Tan. Michael Tan drew my attention to this. By the way, I asked Chicken Genius by DM to do a video with me. He did not respond. He may not have seen it. He may just get a lot of messages. I'm not trying to be critical of him, but I did invite him to come on the channel. And I asked Michael Tan if he would do an interview with me. And Michael just said he wasn't comfortable doing an interview, but he certainly appreciated the conversation we had by DM. So he went through Chicken Genius's video. He said he used to preach long-term Tesla holding in the past, but Tesla was never for him because while he believes in long-term investing, he cannot stem or stop his emotional response of wanting to time the market. And now he preaches Tesla Q arguments in his channel. So Michael is dead on here. And he pointed me to this video. And he said, someone forced me to listen to that, guys. So here are some notes. And I did the same thing, basically. Michael got me to listen. CGS, this is the point that Chicken Genius just made. Tesla cars being consumer discretionary. Well, technically correct. Cars are classified as such, not Tesla as a whole. He equates Tesla with the traditional mass production auto industry. Many reasons, but the main are Tesla has 30% margins, and this is a demand generation lever. Tesla is still a very small percentage of global auto production and doesn't have cheap models. Recessions affect the affluent less, and if the affluent want to buy an EV to replace an internal combustion engine, Tesla has the largest market share of EVs. Now, I don't agree in this market share of EVs. If the affluent want to buy a nice new car, they're going to buy the nicest new car they can buy, and Teslas are better than gas cars, period. End of story. So if you are wealthy and it's time to buy a new car, and you're thinking, am I going to buy a Mercedes S-Class or am I going to buy a Tesla Model S? The Tesla Model S is going to be more attractive to a lot of wealthy buyers. And Tesla doesn't have such a huge market share that they need 100% of the market. If they get 3% of the market, they're doing spectacular. They only make like 1 or 2% of global auto production anyway. Basically, rich people will buy Tesla anyway. And an interesting fact from Michael, during recessions, Ferrari grew, right? Wealthy people are not affected by recessions in the same way. The current buyers of Tesla cars tend to be upper middle class and wealthy. And if they need to buy a car, they're buying a car. And at certain point, your friend bought a Tesla, you talk to your friend about his Tesla, you discover that Teslas are more convenient, you discover that you can charge in the garage, you don't have to go to gas stations anymore, you discover that the long range trips aren't really a big deal. I'm going on another road trip coming up in a couple of days. Teslas are great for road tripping. This fantasy that their range is a problem is ridiculous. I don't even have a particularly long range Tesla, 333 miles, and mine loses more range at high speed because it's less aerodynamic, and I don't have a problem. I enjoy my road trips. So I think you're going to see that Michael's really nailed this. But let's get back to Chicken Genius.
You must be out of your mind. Long term, 5 to 10 years, FSD, robots, no problem. Short term, the fundamentals have changed. Tesla's backlog is shrinking.
Okay, let's address this backlog lie. Their backlog is still huge. Okay, they want their backlog to shrink because it's unpleasant for consumers to have to wait that long for a car. The backlog is shrinking. You still can't order a Model 3 long range. The backlog on the Model 3 long range is so big that you can't even order one in the United States. He's going to dive in a bit more on this China situation. I can't know what's going on in the Chinese economy. Chicken Genius nobody really knows what's going on in the Chinese economy. Will Chinese demand shrink? I don't know, but let's keep going with him.
What about new order flow? If you got connections up at Tesla, ask them. Tesla is losing market share.
This is another monster mistake, and this is a common thing within the community of people who don't really get Tesla, is they will say something like market share is shrinking. Okay, let me explain this. Tesla's production is growing. Their deliveries are growing. Despite what people think was a bad quarter in Q3, Tesla's deliveries were 42% higher than the last Q3. Year on year, they're up 42%. Tesla delivered 936,000 vehicles in 2021. They're going to deliver close to 1.4 million vehicles in 2022. It's about a 50% increase, and that's with a massive drop in Q2 because of COVID lockdowns in Shanghai. So Tesla is growing fast. So if Tesla is selling more cars and the global market for cars is shrinking, then Tesla's share is growing, not shrinking. Now, if you define an arbitrary market of the EV market and say Tesla's share of the EV market is shrinking, sure, but there is no EV market. The EV market is a fiction that is trumpeted by people like Gary Black. I think Gary may have actually gotten over this concept of an EV market share. It's something I keep seeing people talk about as EV market share. EV market share is irrelevant. There's a vehicle market. There's also a transportation market. The whole EV market share, vehicle market share is not going to matter when we go to robo-taxis anyway. It's going to be about transportation share in the future. It's how are you getting from point A to point B. But within the current context, if Tesla's growing the number of vehicles they're producing and selling, how are they having declining market share? Right? It's because they're growing the EV market, which is a fictional market. The market is the vehicle. The relevant market today, until we have robo-taxis, the relevant market today is the vehicle market. And Tesla is growing within the vehicle market. The market share is growing rapidly. Their production is growing rapidly, and their deliveries are growing rapidly. This is a fast-growing company that has not changed. We've got 2 factories ramping, Berlin and Texas. Fremont is growing somewhat. Shanghai has probably maxed out, but don't underestimate Shanghai, and maybe they're going to build another factory in Shanghai. Everything I'm seeing, it's looking good. I don't know what, I'm supposed to reach out to Martin Viecha and say, hey, is your market share shrinking? What kind of stupid thing is that? You can see on its face, Tesla's producing more cars, they're delivering more cars. Their market share is growing. If you choose an arbitrary market and say, well, Tesla's market share in Norway is falling from 70% to 60%, that's an arbitrary market. Their share of the global vehicle market is growing, and it's growing fast. And more importantly, their production and deliveries are growing fast. Market share is kind of irrelevant. As long as you're making a lot of cars and people are buying them, who cares what your share of the market is?
I know the argument bulls make, the TAM is huge. However,
yes, the TAM is the total addressable market. Yes, the TAM is huge. That's not the argument I make. I don't think the TAM is that important. I think the TAM, the global vehicle market, is somewhere around 70 million vehicles a year. I think in the next 10 years, assuming we get back to some kind of normal economic growth, the total addressable market, the total vehicle sales in the world might reach, let's say, 90 million vehicles. But Tesla, I don't expect Tesla to go much higher than 20 million vehicles by 2030. Maybe they'll get higher than 20 million vehicles, but the total addressable market is so huge that it doesn't matter, right? If the total addressable market was 50 million vehicles, Tesla could still hit 20 million and it wouldn't be a huge problem. But if the total addressable market is 70 million or 90 million, there's no challenge here.
In such market condition, price matters. If someone is buying an electric SUV, this is a BYD Auto 3 with the Blade battery, at almost half the price of a standard Model Y.
This is one of the other mistakes. He's focusing on the competition is coming, and there's this BYD vehicle that's half the price or roughly half the price of a Model Y. And this is one of those things where when people bring this up, I've seen this with BYD, I think I've seen this with at least one other car company, maybe it's NIO. Oh, their cars are selling for a lower price. So I'll ask you this question. I've asked this question before, and people have said this. Is BYD doing something that allows them to manufacture their cars at lower cost than Tesla manufactures cars? The answer to this question is no. Tesla has the most efficient manufacturing out there. So BYD is using the Blade battery, which is lithium iron phosphate, but Tesla also uses lithium iron phosphate. BYD is even selling Blade batteries to Tesla. If BYD's business is so good in its car business, why aren't they using all their Blade batteries in the cars that they're selling? And the answer is because their cars aren't, it's not that their cars are terrible. Their cars are better than gas cars. They're able to sell cars. They're either not able to manufacture their cars in enough volume to use all their batteries, or their cars aren't that great, or they're not making money on their cars. If they are pricing their cars that low, and if I'm correct that their cost of manufacturing is higher than Tesla's, Tesla Shanghai is a very efficient factory, and you can't say, oh, well, Tesla's costs are higher because Chinese labor is less expensive. Tesla is using Chinese labor in Shanghai. They're using the same Chinese labor market that BYD is using. So what is BYD doing that allows them to sell their car at so much lower of a price point? The answer is they're losing money on every car they sell. And Tesla is making a huge profit on every car they sell. Maybe BYD is barely squeaking out a profit on their cars. I don't know what they're doing. If pricing ever becomes a problem for Tesla, they can lower prices because they're making such high profits on the cars that when they start to hit a demand shortfall, which they're not at yet, at that moment, they can lower the price of cars. We're about to see a demand surge in the United States because this tax credit's going to hit in January, and all of a sudden it's going to be $7,500 less to buy a Tesla. I think Tesla's going to rejigger the pricing scheme in the United States so that they capture some of that tax credit gain. The thing is, Tesla doesn't need more demand. They're backlogged. This idea that there's a demand problem, this is the cry of the Tesla queue. There's a demand problem. There's a demand problem. There's a demand problem. There's no demand problem. Will demand fall somewhat? At some point, will Tesla have to lower prices in order to be able to generate more demand for their vehicles? Yeah, probably. I think in the next 3 years, maybe even the next 2 years, at some point, pricing will come down a little bit. As they're able to ramp production enough and get enough volume production out there, they will probably find a way to lower pricing a bit. And that's something that Elon has said they want to do. They want to make the cars more affordable. But really, it's going to be the next generation vehicle platform, the robotaxi vehicle. That vehicle is going to end up having lower pricing. But anytime they want to, Tesla could sell the Model Y for $5,000 less or $10,000 less and still make a substantial profit. So if they're ramping, and if they ramp production, let's say they double Model Y production and they lower prices 10%, I'm really happy as a shareholder, right? Because if you double production, and you lower prices by 10% and you're making 50% margins before, now you're making 40% margins, you've made my profits a lot higher and I'm happy as a shareholder. So I don't think Chicken Genius gets that.
Total demand destruction. China has a 1 week wait time.
That's old news. The 1 week wait time changed. There might be one particular model that still has a 1 week wait time, but a lot of the Chinese models, their wait times went up because now Tesla is shifting a lot of the production from Shanghai to Europe and other destinations. I think some went to Japan. Tesla can move cars around and sell them in other places. If there is a demand shortfall in China, there's still a lot of demand around the world. Again, the global vehicle market is around 70 million vehicles. If it drops to 60 million and Tesla goes from 1.5 million cars to 2.5 million cars, They're still nowhere close to meeting the demand that's out there. If you believe that Tesla makes the best cars, and Chicken Genius said at the beginning of the video he believes Tesla makes the best cars, if they're making 2.5 million cars in a global market of 60 million cars, there's plenty of demand. Talks about demand destruction, doesn't get it. Yes, if overall demand in the market goes down, that's generally bad for vehicle manufacturers. But if you're making the best cars and you're making them profitably and you're able to adjust pricing a little if you have to, you will continue to sell every car that you make. If you only make 2.5 million cars in a global market of 60 million cars, 70 million cars, 80 million cars, there's no problem here.
Where are the new orders coming from? From Europe, China? China's economy is in shit and Europe is shittier.
This is the kind of thing that I can't know, you can't know, he can't know. I do think there are economic problems in China. I do think there are economic problems in Europe. I'm concerned about an overall global economic collapse. And look, if we have an overall global economic collapse or a global thermonuclear war or, you know, locusts, pestilence, plagues, all these bad things can happen. And yeah, I'm more concerned that these bad things are going to destroy the world than that they're going to destroy Tesla stock. If we're looking at, an economic collapse in Europe, an economic collapse in China, an economic collapse in the United States, then my Tesla stock is not my biggest concern. My biggest concern is stocking up on food, water, and ammo. And yes, I have stocked up on food, water, and ammo. So I'll be okay. If you haven't stocked up on food, water, and ammo, now might be the time. What does he mean by his description of the Chinese economy? What does he mean by his description of the European economy? Does that mean global demand drops from 70 million cars to 60 million cars? Does it mean global demand drops from 70 million cars to no cars? Right? If there's still demand out there, and if this is the question, if you believe Tesla makes the best cars and you believe there's still demand for cars, then this is not the problem that you think it is. If Tesla was making 20 million cars a year, which is where we're hoping they'll be in 2030, and the global market falls to 30 million cars in 2030, well then, first of all, we have a lot bigger problems than our Tesla stock. That means global economic collapse, and there's a lot of massive starvation and all kinds of other problems around the world. If that happens, yeah, I suppose there's a demand problem for Tesla, but personally, I got much bigger things to worry about than that.
On advertising from a company that says they will not advertise. Supply constraint, can't make enough cars to supply the market. But now they're hiring marketers and cold calling. Why?
A company with 100,000 people hiring a digital and content specialist and trying different sales practices in the small market of Singapore does not indicate a demand problem overall for the company. Let me say this again. Tesla has about 100,000 employees. The fact that you noticed one job posting for a digital and content specialist for some kind of marketing in China does not indicate a massive demand problem in a country of 1.3 billion people. This is this question of you identify this like tiny fact out here that sounds like it's material, and you ignore the context of a company with 100,000 employees, and they hire one person for one job. Maybe that job already existed and the person left, and they're trying to fill the job. You can have great demand and still engage in some marketing, and marketing is not advertising. Those are not the same things. And maybe Tesla will have to advertise in some markets. Maybe that ends up being a good strategy. I just don't see what the big deal is. I think Chicken Genius just got full of himself and got distracted by shiny little facts over here that don't fit with his bizarre hypothesis. He still says we're good out to 2030. So if we're going to be producing 20 million cars in 2030, then why aren't you worried about 2030? Rather than worrying about 2022 or 2023.
Please just exercise some sort of common sense.
I hate the term common sense. I probably use it occasionally, but here's the thing. Common sense is a made-up term. It doesn't really describe anything. It's not really clear what it means. If it was common sense, we would already understand it, right? If it was common sense, it would be common. It wouldn't be a problem. I would argue if there is such a thing as common sense, it's pretty uncommon. You walk around the streets of Florida, or you drive around the streets of Florida, a lot of places you go in the world, you see people behaving in a way that doesn't make sense to me and probably doesn't make sense to you. You might think my behavior doesn't make sense. I might think your behavior doesn't make sense. I just went to a doctor's office and masks were mandatory. I didn't think that made a lot of sense. Other people think my not wearing a mask doesn't make sense. Common sense is uncommon. Common sense is the kind of thing that someone will argue when people don't agree with them, and they'll just say, well, my way is common sense and you're not right. That's not a genuine argument. That's just resorting to some kind of BS.
Step out of the echo chamber just for a moment.
Now, look, I do operate in a Tesla echo chamber. There's no question about it. I listen to a lot of voices inside the Tesla echo chamber. But just like now, and you know I make videos about this, I listen to what critics are saying. I frequently make videos breaking down what the critics say. It's not like I'm ignoring what the critics say. I break down what they say and I show why they're wrong. If I was ignoring the Tesla critics, if I was ignoring Tesla Q, if I was ignoring Chicken Genius right now, then I would be stuck in an echo chamber. But the fact that he first complained that toxic femboys were going to be making videos in reaction to his video, well, obviously, if I'm listening to your video, I'm not stuck in the echo chamber. Right? So make up your mind. If I'm stuck in an echo chamber, then I'm not responding to your video because you're outside the echo chamber, right?
The layoffs really pisses me off. I really feel bad for the employees. They work so hard.
Are you a shareholder or are you a union advocate? Make up your mind what you're here for. Look, I don't want employees to be laid off either. I want the employees to be happy and successful, but I want the company to manage the company. I want the company to lay off workers when they're no longer necessary. I want the company to operate efficiently. And if the management team decides, hey, we don't need these particular jobs anymore, these particular jobs are inefficient, this is not going to boost the company's growth, then management makes decisions. Whenever a company is laying employees off, it's a sign that the company is managing the business and trying to make a profit. You don't want the company to make a profit, then you're not really a long-term investor in the company. And if you worked for Tesla and you get laid off, you're going to find another job because you have skills that are in demand. I have not seen a whole list of unemployed Tesla employees, laid off Tesla employees suffering, unable to find work. There's huge demand in the market for labor in general. And if you've got that kind of skill set, if you've got that kind of work experience, you're going to find a job. Unless we face total economic collapse, and then how much Tesla stock you have is not your biggest concern.
And till now, there's still nobody that can explain to me $18 billion cash, a high free cash flow at a company that grows 50% a year. 50%! Somebody just explain to me.
I'm not sure what he wants explained to him here, but if you believe that Tesla's growing 50% a year and has great cash flow and $18 billion in cash, why are you short in the stock? Why aren't you a buy and hold investor in a company that's growing 50% a year, great cash flow, big cash pile? That sounds like a company I want to own stock in. Where's the problem here? Make up your mind. Is the company, if the company, I think what he was referring to is why are they laying off people when they're making so much money? The answer is because the job of management of the company is to make more money. If you see a company that's not laying off people and keeping on people who are inefficient and not growing the company and not making profits and, not helping the company succeed, then you see a company that's not well managed. A company that is laying off employees is a company. It's hard to let people go. It's not an easy management decision to make, but you make that decision when you have to because you have an obligation first and foremost to your shareholders. I'm a shareholder. I'm sorry for the employees who get laid off, but I'm confident you're talented people and you'll find work. And you probably own stock in the company too. And honestly, long term, you're going to make more money on your stock than you're going to make on the job.
Management knows something we don't.
Yes, I'm confident that management knows something I don't know. I think that's generally true that most companies, management knows something we don't know. I think Tesla shares more information than most other companies. I think they're more open than most other companies, but it's very clear they know stuff we don't know. I don't know exactly what form Cybertruck is going to take. I don't know where the next gigafactories are going to be. I don't know what the robotaxi is going to look like. I don't know what method they're using to determine how close robotaxi is to coming or FSD is to being, widespread or whatever. There's a lot of things inside the company that we don't know, but they tell us more than almost any other company. They consistently ask about demand and they consistently tell us demand is not a problem. The day they tell us demand is a problem, we'll know it. No evidence of pricing cuts. There was this story about them giving a discount on Tesla insurance in China. That wasn't to sell cars, that was to sell insurance. Do you get it? People pick random facts and, here's a problem. So they want to get people to sign up for the insurance because they're going to make money on the insurance. This is a good thing for the company.
Giga Berlin, good luck. Think about it this way. The cost of energy directly affects the cost of manufacturing.
I want to thank Michael Tan for getting on this one. Michael covered this. Talked about the backlog, huge backlog for Cybertruck. He talked about layoffs. It's irrelevant. It's Tesla's right to trim the fat. Cost of energy right here. Chicken Genius says the cost of energy in Gigafactory Berlin will kill it. And Michael points out the energy used in a factory to weld a car together in a typical auto plant is 80 kilowatt hours, which is about US $80 at $1 a kilowatt hour. I think that's massively elevated. He says Singapore is about 18 cents a kilowatt hour right now. I know in Florida it's around 10 cents a kilowatt hour or 13 cents a kilowatt hour. If you go out and supercharge off peak, it's maybe 22 cents. On peak, it's maybe 45 cents. I don't know where the pricing is going. It depends on where your factory is and everything. Commercial pricing tends to be less at scale. Tesla also generates a lot of its own electricity with its solar panels. So, we're talking about at most $80 a car for the electricity that goes into welding a car together. So, is there more energy consumption? Maybe it's $800 a car. This is if you add all the electricity together to make a car, maybe you're talking about $500, $800. It just doesn't add up to that much. It's not a huge problem for Tesla. If they have to pay more for electricity, they'll pay more for electricity. Maybe they'll throw more solar panels on the roof. Maybe they'll find other ways of getting electricity. This is not a problem. And Michael points out the cost of energy for other components will be the same for all auto manufacturers. So Tesla's not rendered uncompetitive by Giga Berlin itself. And Tesla is more vertically integrated, so they're more able to internalize those costs. They're not facing price increases from other suppliers as much as others because they do produce a lot more of the car themselves.
You literally become uncompetitive.
So Chicken Genius is saying you become uncompetitive because of the price of electricity, but all the European manufacturers are going to see increases in electricity prices. So if they're competing with European manufacturers, it's the same problem. The European manufacturers have the same electricity cost increase as Tesla, as Giga Berlin does. So how is this a problem for Tesla competitively? He's so caught up in his obsession with short-term stuff, and he's just reaching around and grasping at straws, looking to defend his own failures as a short-term trader.
Energy is life. I may even do a video on this. Depends on my mood.
Depends on his mood. This is not a long-term investor. A long-term investor doesn't go by his mood. Okay? Chicken Genius, you can see this. He's getting animated. He's calling people toxic femboys or whatever. Chicken Genius is driven by his mood. This is one of the things that happens. You get so caught up. I think one of the things that happens is, like me as a YouTuber, he's a YouTuber successful. To some extent, it's easy for us to get full of ourselves. We think somehow we're smarter than everyone else because, geez, all these people are listening. I really appreciate you watching my channel. I don't think you watching my channel means I'm somehow smarter than Elon. Unfortunately, we see this happen in the Tesla community, that Earl of Frunk Puppy now thinks he's smarter than Elon, that Gary Black thinks he's smarter than Elon, that Zach and Jesse, now they think they're smarter than Elon. Ben Sullins and E for Electric, they get an audience, they start making money at this, and all of a sudden they start thinking they're smarter than Elon. I'm not smarter than Elon. I'm not smarter than Drew. I'm not smarter than Zach. I'm not smarter than Martin. I'm not smarter than Ashok. The Tesla team is smarter than me. I have faith that they know what they're doing. They know more than me. I sometimes think they're wrong about things, but when I say they're wrong, I recognize they probably know more than I do. This is just my theory. I just made a video about this, about bot. I think bots should go in beta rather than in factories, but okay. They probably know more than I do. This hubris that comes with becoming successful as an investor and successful as a YouTuber starts to make you think you know better than other people. I don't know better than Elon. Chicken Genius doesn't know better than Elon. Don't let that hubris get away. And when you get that hubris, then moods start affecting you. I'm just a chill long-term investor watching this, going along for the ride. I get animated sometimes when I see people sound stupid, and when I get particularly animated when I see people criticizing Elon when they don't know what they're talking about. So maybe I get a little moody on that, but I don't get a little moody on my stock trades. I buy Tesla when I have cash available. I'm convicted and convinced that Tesla is the best investment going forward, and I stay with it. Hashtag not financial advice. Use your own judgment. Do your own due diligence. Don't stay in the echo chamber. Listen to people like Chicken Genius. Listen to people who are critical of the Tesla story and make up your own mind who makes more sense.
The last quarter, deliveries were below estimates. I think that Q4 deliveries will be much higher. But remember, the markets are forward-looking, pricing in future expectations.
That's what markets should be. And I think that's true to some extent. I think short term markets are driven a lot more by traders making short term decisions about calls and puts and dips and so called technicals. There's all these things that are going on that drive short term trading and short term stuff. Long term investors are driven by long term valuation. And when there's a clear shift where it becomes obvious that a company is going to succeed or fail, and long term investors buy or sell based on that news. And we don't really have that kind of news yet. The news we have is Tesla continues to grow fast. Q3 deliveries were only 40% up year on year. Production was higher. There was a shift that is better for Tesla long term of not trying to push for jamming deliveries in at the end of the quarter to boost quarterly delivery numbers and spreading out deliveries in a more even fashion, which lowers transportation costs and lowers logistics costs. This is a good thing. Still, production numbers were a little less than I hoped for. They were a little bit under Troy Tesla's estimates, but they still produced a lot of vehicles. And there was a hiccup in July with some lines being shut down for a week or two here and there, and that can explain some of it. So really what we're looking at, as far as I know, Tesla's still guiding to a 2 million vehicle a year production run rate at the end of 2022. And if you're looking at 50% of growth a year, that's 3 million a year run rate at the end of 2023. And you're looking at potentially 2.3, 2.4, even 2.5 million vehicles produced and roughly delivered in 2023. This is fantastic growth for Tesla. Things are looking great.
Well, will I buy Tesla stock again? Yeah. Again, I love the company, but not the stock price. The target is still the same at 420 pre-split, which means about 140 levels.
Let's break that down. If the stock price was $140 a share, and if we're looking at earnings per share in 2023 of about $8 a share, remember markets are forward looking, that would mean a PE ratio below 20. Okay, a price earnings ratio below 20. This is an insane valuation for a company that's producing $8 a share of earnings and growing 50% a year. And you heard, he said it. He said the company's growing 50% a year. So if it's earnings per share, and I think profits are growing faster than 50% a year, by the way, but if we see earnings per share of $8 in 2023, and it's going to grow 50%, then in 2024, it's going to be $12 a share. I think it's going to be closer to $20 or $24 a share in 2024. And you're paying $140 a share, you're getting to the point where your price earnings ratio is less than 10, right? Once it goes over $14 a share, which could be 2023 or very likely 2024, at $140 a share, your price earnings ratio is less than 10. That's an insane valuation. He doesn't talk about price earnings ratio at all in this video. Price earnings ratio is one of the stock fundamental tools you use to analyze a stock. It's one of the core fundamental tools you use to analyze a stock is price earnings ratio. He's not thinking like a long-term investor. He's thinking like a trader. He's using his platform. I could be really cynical and say he's using his platform to stir up consternation, maybe try to drive the stock price down a little bit more so he can buy it a little lower. I don't know whether this is manipulation or not. I don't think he's that sophisticated. I don't think manipulation tends to work that well. I don't think his audience is big enough to succeed. But maybe that's what he's doing is he's trying to push the stock down more so he can buy it lower. Because if you get the price earnings ratio, even at the current, let's say $240 a share, on 2024 numbers, you're talking about a price earnings ratio around 10. A forward-looking price earnings ratio around 10. That's 2 years ahead, but this is an insane bargain to buy Tesla. I just bought at $246 a share. Full disclosure, I own a lot of Tesla stock. I'm a heavy Tesla investor. Never sold a share. I'm going forward. If I have more free cash, I'm going to buy more Tesla stock. I'm pretty much reaching my limit of what I can do, but maybe.
For now, I'm mostly in cash.
Mostly in cash. What I don't know, and what I don't think we know is, are we in an inflationary environment? We were experiencing high inflation. The Federal Reserve is making an effort to reduce inflation. I am hearing voices saying we're now risking deflation. Elon is talking about that. Cathie Wood is talking about that. I've seen others talking about that. I'm not confident that we've got inflation under control. I don't know. I'm not saying we do or we don't. Cash is not a riskless asset. If you experience high inflation, then your cash loses value. Tesla goes up in inflation because the price of the cars goes up. So Tesla roughly Tesla is largely unaffected by inflation. They're affected a little bit by inflation, but a productive asset is affected less by inflation than cash because cash is not a productive asset. In an inflationary environment, you want to hold productive assets or hard assets. Guns, for example. Cars are a good asset to hold in an inflationary environment because if the prices of cars are going up, you buy a car at a certain price, you're able to sell it for the same amount or more later, then that's a good asset to hold. You can't sell your cash for more later. So this idea of cash being something to hold in an economic crisis works in some economic crises. It doesn't work in other economic crises or crises. So touchy there. Really, really tricky. People think that holding cash is somehow a magic answer. Well, suppose you're holding cash and the stock goes up. Well, then you missed out on the rise. Suppose you're holding cash and there's high inflation. Well, then your cash lost value. It's not so simple.
Remember, while it feels good to be in an echo chamber, my advice is to have some situation awareness. Don't be cocky. Markets will humble you.
I love "don't be cocky" from a guy who is as cocky as you can get. Yes, I agree situational awareness is important. I think most people have very little concept of what situational awareness is. It's really hard to get a grasp of what the situation is in today's world, economically and otherwise, because we're bombarded with so much media. There's so much propaganda. Maybe it's Russian propaganda. Maybe it's Ukrainian propaganda. Maybe it's Chinese propaganda. Maybe it's US government propaganda. Maybe it's Tesla propaganda. Maybe it's Tesla Q propaganda. There's all kinds of messages going on around us, and it really is hard to stay grounded and have a sense of what makes sense, what's going on around us. I don't have really good answers to that. What I do have good answers to is I pay a lot of attention to what happens to Tesla as a company, and I see a company that is growing fast. I see a company that is selling every car that they make. I see a company that has been raising prices and continuing to sell every car that they make. I see a company with massive order backlogs on at least some of their models. I don't see a problem here for Tesla. I mean, are there problems on the horizon for Tesla? Sure. They have the best technology, they have the best software, they have the best cars, they have the safest cars, they have the most efficient cars, they have the most efficient manufacturing, they have the best manufacturing. There's so many things going for them. That's the situation I'm aware of. I'm not sure what situation he's talking about. Are we in a recessionary slash inflationary slash deflationary, whatever environment? I don't really have a good handle on all that. I recommend watching the All In Pod. I think that's good. I don't know that they're right. I like listening to those guys. I think that's helpful to help you think about it. But fundamentally, whatever the situation is, we know Tesla grows in a crisis. If we're facing a crisis, I'm betting on Tesla over anything else.
Invest safe.
Invest safe sounds good, but there is no safe. There is no safe investment. Tesla's not a safe investment. Something could happen to Tesla. Cash is not a safe investment in an inflationary environment. Bonds are not a safe investment in an inflationary environment. This company, that company, utility stocks, everything sounds like a safe investment until something bad happens. Real estate can be a safe investment unless the real estate market collapses. The idea that you can invest safe is a fiction. Investing is risky, right? For me, I've made the choice that I see the best alternative is I'm taking a risk on going pretty much all in on Tesla stock because I believe over the long term, Tesla's the best bet for the future. That companies that are successful, companies that are innovative, companies that are efficient, companies that are well managed will outperform in any kind of situation. And that's the bet I'm making. Is it the right bet? I don't know. I'm confident in it, but there's some risk that there's going to be a loss. There's also a lot of potential for gain, and that's the balance that I've chosen. I don't see another place to make an investment. Like I almost bought a home, and I decided I didn't want to put as much capital I would have to into the home I was going to buy, so I'm renting for the next year. Starting in November 1st, I got a new place to rent. Rather than put up $20,000 or $40,000 in cash where I would have to sell Tesla stock in order to do that, I'm more confident in the value of my Tesla stock going up than I am in the value of the condo I was going to buy. We're looking at potential collapse in the real estate market here in the United States. I don't know what we're looking at. To me, the safest investment is Tesla stock. It's not safe. The notion that you're going to invest safe is misleading. I want to thank Michael Tan for pointing this out to me and helping me get through it. And I loved his thread. Check out Michael Tan on Twitter. Definitely worth a follow after seeing this. His point just at the end about Tesla China is now cold calling customers, or Tesla Singapore cold calling customers. It's not a sign of demand weakness, but it's experimentation. They probably have some breathing room now that Tesla's established, and besides chasing targets, they actually created programs to amp demand and train for more rainy days. They have tons of levers to push, and they've never even used the price drop yet. He says, I think CGS, Chicken Genius Singapore, is now flustered and grasping at straws, not mentioning other points like the Inflation Reduction Act, which gives Tesla a lot more margin and room to move and autopilot new processes, etc. So don't get flustered by his rant. And of course, we need to be less wrong, right? I might be wrong. I want to see your comments. Help me see how I'm wrong. Check out the t-shirts at elonbits.com. Please check out my other videos. Please support me on Locals platform, on Patreon, or as a YouTube channel member. Links to all that in the description below. Please like this video, share it with your friends, and subscribe. And thank you so much for watching.